Welcome back. You're watching Traders Corner, and joining me, as always, is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, before we review the two trades that you put on for the portfolio last week, which were quick in and outers, starting off with the S&P 500, things were looking better, and now they seem to have taken a turn for the worse.
They have. They've rolled over a little bit. So our chart of the S&P 500 is up on the screen here now. So last week when we were here, I spoke about the possibility that this 2740 area might be support if it pulled back to there, and it did hold as support for a few days last week, and then yesterday, following the Trump trade tariffs and whatever, we saw the market sell off quite sharply, and it traded all the way down to 2700 actually, and then it rebounded a little bit off that level into the close. But what's still interesting to note is there was a gap down yesterday, so that gap can't be ignored. Is that a breakaway gap to the downside? Maybe. But this lateral area at around about 2700, there is some support there. It is obviously a round figure. So my expectation now is that we will probably see this market chop around in the next couple of weeks, maybe with 2700 acting as support, perhaps up to 2750, and it might be range bound in amongst that area. And if I really stick my head out and say, I don't think I suspect we might actually start to see the formation of a right shoulder over here of a head and shoulders pattern. And then the 2700 area becomes increasingly significant. If it starts to break down below there, then we've got the 200-day moving average below that, which could once again be tested. So, you know, these middle months of the year, and particularly now, July and August, where it's really the meatiest part of the Northern Hemisphere summer, if you want to call it that, we do find that those months of the year are actually quite choppy very often. So it wouldn't surprise me at all if this market just goes into its sort of sideways choppy range now for the next couple of weeks.
And that sort of coincides with, well, of course, coincides with our winter. Anyone's feeling depressed because it's winter and the economy has gone to hell in a handbasket, and that doesn't really bode well for our exchange either, I imagine.
No, it doesn't. So here's our top 40 index. This is actually the top 40 future that we look at. Now, do keep in mind, over the past week, we've now switched over from the June futures contract. We're now trading the September futures contract. The September contract trades at about 150-point premium to the June contract, and that is made up of additional time value for the next 3 months minus some embedded dividends. So I'm not going to get into the complications of that. In terms of the technicals that we see here, you can see, just broadly speaking, a market that's still going very much sideways. We're trading at the same level that we were back in February of this year. And over the past week or so, there's a little bear flag pattern that seems to have formed over here. That did break to the downside yesterday with weakness in overall overseas markets, including our own. So, you know, if that break to the downside were to follow through further from here and we were to see further activity below 50,000 on the futures, then there's a possibility that we come back to the next round figure at 49,000. And that was the low that we saw back in late May. And then also there's a gap back from early April. There's a gap at 48,650. And I suppose it might not be unreasonable to expect that we maybe go and try and target that gap at some stage if this weakness does persist. Yeah. So whilst that is the case, this overall market picture doesn't really fill me with excitement at the moment. It's rather range bound, and I suppose it's the kind of market really where you want to actually be fading the extremes, be they to the downside or to the upside.
Okay, perhaps we'll pick up on that, but let's have a talk about the two latest trades, because they were very short-term trades, and you highlighted that last week. And have you executed them? Are you in and are you out of them already?
Yeah, I am. I'm in and out very, very quickly. And I guess this also talks to the theme of trading or fading those extremes in the market. So if we look at Remgro quickly, this is the daily chart now going back about 2 years on Remgro. And I said last week that this 200 Rand round figure was a big, important level of lateral support, and that the flush below 200 that we saw last week would quite feasibly be exactly that, a flush before a reversal back to the upside. It did do that. So if we look back at the 15 minutes chart, this is what we based our trade off last week, and this is what I showed for last week's show. What I identified was that we had this big gap to the downside last week, Tuesday, and the stock traded all the way through 200 Rand quite aggressively, but it seemed to find a bit of support in the early part of the morning and began to trade up. So based on that, I took a bit of a bet, if you want, just on the fact that that gap down was likely to be filled and that we would probably see that flush below 200 being reversed. And I would look for a gap close. So we went long at 197 Rand 40 with the stop loss at 195. That would have meant that the stock had to trade below the day's low in order to trigger that stop loss. And I said that I would look just for a quick move back up to fill that gap and to take a profit into the gap close. It did work. We sold our 500 CFDs out at exactly 202 Rand. I had a hard sell order in there, so that worked out quite nicely for us. We banked 1,900 Rand profits on that trade, as you can see. Look, the price did continue to move higher from there, but I'm not that bothered. Our strategy was just to trade for the gap close. We got that gap close, and it's worked out. On a bigger picture view, I don't know, maybe it still goes higher. There is a weekly reversal that's evident on Remgro now last week, so that might indicate a medium-term bottom. But for all intents and purposes, for this trade, we out already. Yeah.
And what about MTN? Because I've been noticing a lot of the Twitter traders, no, it's not meant to be a pejorative term at all, but a lot of people highlighting longer-term charts on MTN, saying they're really concerned about where MTN is headed if you look at it on a much longer-term basis, that it could be about to scale or set new lows for itself.
That's true. I mean, if you look at this longer-term chart, again, here we're looking at about 2 years' worth of trading history on MTN over here. This is the daily chart. The stock has been range-bound between 110 Rand at the lower end and up to 135 at the upper end. Now, last week on the show, I said that the flush below 110 would possibly provide us with a buying opportunity for a quick snapback rally. And that was what we based it on. It was really a very quick in and out trade. What you say about the long-term chart is right. It does look a little bit precarious at the moment. And I think especially if it sustains itself below 110 Rand like it is now, then I think there's a risk that it does maybe go down to 100 Rand and start to shake the tree down at that level, as it were. So it's not looking fantastic. But again, in line with fading the extremes as we did last week, I spoke about the 15-minute chart on MTN, and that's what we've got over here. The stock did gap to the downside last week, Tuesday, and it traded all the way down to about 106.50, somewhere there. I went long at 107 Rand and 14 cents. For a quick snapback, really, as well. I was looking for a move to 111.50, and that hasn't even happened yet. It started to move up, and as you can see, it closed the opening gap on the day. It tried twice to sort of surpass that opening gap and failed on the second attempt and began to drift lower. So by that stage, I'd already taken the profit on the Remgro trade. I thought we had done nicely there. I didn't really want to see myself making on the one and losing on the other and coming out nowhere. So I think I just took a bit of a gut feel decision, and I banked out the profit at 108 Rand and 17 cents. So really not much. We made 610 Rand on this trade, which is fine.
Enough for a happy meal.
Well, yeah, only just enough for a happy meal. And it does feel a little bit like, picking up pennies in front of the steamroller. So I'm still very, very wary as things stand. And I guess that's also why I chose to bank profits very, very quickly here, not see whether it would go up to our actual intended target level, and it hasn't got up there. It hasn't even got close. So I suppose for now, banking that quick profit has been the right thing to do. But it's been an interesting week. If you've wanted to try and make money on the long side, you've really had to be quick in and out. There's a lot of technical weakness on the broad, the vast majority of stocks in our market are actually in horrible bear markets at the moment. There's only a handful of shares that are actually exhibiting any sign of bullishness at all. For the vast majority of the JSE, the charts just look horrible. They're all in bear trends for the majority.
Well, I have to say it reflects what's happening in the economy, and I think it's finally catching up with us. Garth, which is one of the reasons why you look overseas. But unfortunately, it is a trade that you did in Honeywell, and it doesn't look as if it's done what you wanted it to.
No, it hasn't, unfortunately. So here's the chart of Honeywell. This is a daily chart. Now, Honeywell is listed in New York. It's obviously a very big multinational engineering industrial business. And what I'd identified not last week, about 2 weeks back when we did this trade, was the fact that the stock had made what I thought was a double bottom between April and May. It was moving up. It had gotten back above the 50-day moving average over there. It had formed this bull flag pattern and started to break to the upper end of the bull flag. And I thought that looked as if it was projecting a move higher back towards about $160. So I took the trade. I went long on the break to the upper end of that bull flag pattern, and then set the stop loss below the lowest point of the bull flag before the break occurred. So it meant that we were long 50 CFDs at $151. My stop loss was $148, which was below the lowest point of that bull flag pattern. And then the target, as I said, was 160. Now, of course, it didn't work. Unfortunately, we saw it making an effort to pop higher, but it just faded away, and you can see the price has since collapsed. Well, not really collapsed, but it's pulled back quite sharply over the past week here. So we ended up being stopped out on that move below 148. That was where our stop loss was. So we exited at that point. It meant that we lost $160 on that trade. So it's not the outcome that we wanted, but you know, I always try and take a positive out of everything, and in this case, you can see that the stock price has gone lower. We would have lost more money by now, so the stop loss certainly did save us. And in terms of this show, I mean, one of the reasons we've been successful over the years is that we've always managed to keep the losing trades small. Yeah. We accept that losses are going to happen. It's part of the nature of trading. No trader gets all his trades right. But when you lose small, and that's okay.
Yeah. Okay, so you're not initiating a trade this week, but you are looking at Mondi. Why?
Yeah, that's right. Mondi still is exhibiting fairly good technical strength. I mentioned that the vast majority of stocks on the JSE actually look horrible at the moment.
But actually, Mondi is an outlier.
This is an outlier. There's very few stocks on our market that are exhibiting this sort of technical strength and that are actually trending in an uptrend. So Mondi is one of them. Here it is. It's, you know, you can see going back to February this year, it's been trading in this upward sloping channel. The 50-day moving average has corresponded with this rising uptrend support on a number of occasions over the past couple of months, where it has found support. At the moment, it appears to be consolidating in a very nice, healthy, controlled fashion, pulling back towards the lower end of this channel pattern. We have the 50-day moving average also there at the same level. So around about 350 Rand is where there's some support here. And what I would look for in the week ahead is for some sort of a reversal to create off that 50-day moving average, off the lower boundary of that channel. If we get clear evidence of a reversal there, then I think that would signal to me that it's good to go for a long trade, and we'd buy it for another potential leg to the upside.
Yeah, okay. So what to watch in the week ahead.
Yeah.
Garth, given that it has been quite active in the portfolio of the last couple of weeks, what's it looking like? Yeah,
so we banked two profits, obviously, on our South African portfolio over the past week. So the MTN profit is 610 Rand, like I mentioned. Remgro, we made 1,900 Rand. So that has certainly helped to improve the look of our local portfolio. We're up to 162,000 Rand here. Remember, we started the year with 150,000. So we are up 8% for the year to date at the half-year stage. So not spectacular, but I think given the kind of year that we're having on the market, it's better than average, let's put it that way. And then on the offshore portfolio, we took a loss on the Honeywell, as I mentioned, so we lost $160 there. Our portfolio is worth $15,628. That's off a starting capital base of $15,000 at the beginning of the year. So up 4.2% for the year to date. Again, not spectacular, but at least we're on the right side of the ledger for what it's worth.
Yeah, and with the Rand where it is, it probably flatters it even more.
Yeah, I won't take any credit for the weakness in the Rand and the fact that it flatters our performance in Rands, but it does help, so yeah, we'll take it.
Garth, and then just to end off with a reminder that viewers can get a weekly alert from you.
Yes, if you go to traderscorner.co.za and you go to the middle of the page, you'll see there's a link there for a free weekly email. If you click on that link, it'll ask you to enter your details. Very quick and easy registration process. It'll take you a minute of your time, and then we'll send you an email every Tuesday detailing what's coming up on the show for the week ahead.
Great. Garth, we'll leave it there. Garth Mackenzie is, of course, founder and editor of Traders Corner.